Good day, traders. Welcome to Traders Hub. This is another video on forex market analysis using the Elliott wave theory. Last week, I posted a video on the US 500 or the S&P 500, right? My primary view was that the market will come into the blue box and bounce, give us an impulsive move to the upside. So this is just a follow-up video on that video which I posted last week with a little bit of a more detailed analysis on the US 500 index. So I've managed to have a more detailed or a more overall view on the previous market action on the US 500. So from the lows of around March 2009 to the peaks of around about December 2021, the US 500 has been a bullish market and it has gone up in 5 waves, 1, 2, 3, 4, 5. I can just show those waves. That's the impulse which I'm looking at. We can view it better on the weekly. So the market has been going up in that impulsive move. And now, since we know that after every impulse, if this is a wave 5 for that whole bullish market, in as much as this appears to be impulsive, one could say, I was looking at this as 1, 2, 3, 4, waiting for a wave 5. But when I'm viewing this more closely, one could see that after such a high impulsive move for that whole period there, it's quite possible that the market is not yet done with this correction. That could also explain why there was so much noise in this first leg. And this second wave here, which is followed after that correction, the third wave didn't quite get to the level that I was anticipating, because for a wave 3, the Elliott wave theory suggests that it should typically go up to about 1.618. So this wave here falls short of this range by a lot of pips. So I also hold the secondary view that this could actually be a wave C, and the market is still going to give us one more leg to the downside. And if that is the case, then we stand to benefit a lot, because the move that's coming here to give us a wave Y would most likely be equal in length to this WXYXZ corrective structure that we see here. Right? Actually, my other X starts from there. Okay, now that looks better. Right. So we can see that this W here, if we further break it down, maybe on the daily, right, we can clearly see all those waves, that the W was a 3-wave move, and then we have these 3 waves in X, then we have got these 5 waves in Y. Y was quite impulsive, and that is allowed in a triangle, right? Or a diagonal, so to say, sorry. In a diagonal, we can have these 5 waves is allowed, and then 3 waves in X and our Z, which also appears to be a 5-wave move, right? And then we've got our A, B, and C, which is why I was quick to think of this as a WXY corrective structure, because this wave here was very impulsive. This is our wave C. And wave C, according to the Elliot wave theory, can also be impulsive. There's nothing wrong with that. Okay. So with the secondary view now, we'll see that this market has not finished the move to the downside. And I was quick to change my view there when I saw how this pair is reacting from the blue box. So the reaction was not very impulsive as I would have wanted it. It was just like a corrective reaction, as you can see here. So I'm now of the view that the US 500 is still going to go to the downside, because that blue box setup did not quite play out the way that I would have loved it to. So now I'll just simply change my bias to the downside. So I'll short this pair with my stop loss just right above this highest point which the market reached. So I'm risking something around 25 US dollars for this trade. Hopefully it's going to play out the way that I anticipated to. Okay, that's all that I had for you today, traders. Until we meet again in the next video, please trade responsibly, and cheers and goodbye. So that is the current focus there, that the market should at least still give us a leg to the downside. Now, this is a very, very nice trade. If it actually does play out, we are looking at profits of up to $243. Compare that with a risk of about $25. That's quite an impressive trade.